Good morning, everyone. Welcome to the live stream. Afternoon in my case, morning if you're in the US, and maybe night if you're elsewhere, like in Australia or New Zealand. Welcome to the stream, everyone. We'll start in due course in a few minutes' time. I'm just getting everything set up here, and I want to make sure that the sound's all working and that you can hear me. Everyone, welcome to the live stream. Afternoon in my case, morning if you're in the... Yeah, that's all good. So we start at the top of the hour, folks. So if you have any questions, please type them up in here. And also, if you're able to hear me clearly and it's coming through okay, just let me know, please, in the chat right now. Hi there, Joydeep from India. Nice to see you, as always. Thanks for popping in. Much appreciated. Good day, the Jazz. I'm going to keep calling you that. The Jazz from Germany. Good day, Madhuri. Tejas. Yeah, we're going to look at gold shortly, Madhuri. Also from India, and also in my private group. Wonderful to have you here too. You're a big gold fan, I see. A fan of the gold shorts. And you've been asking in the private group when we can add more shorts to this trade. So we'll talk about that shortly. That's a bit of a pun, a dad joke. We'll talk about the shorts shortly. So we're still short on gold and long on silver and on copper. And we'll cover that when we get started. Excuse me if my voice is a bit hoarse. I did several live streams yesterday. I did 2 live streams and a video and had 3 meetings. I seem to have worn my voice out. And I also did leg day at the gym, which involves putting your legs through a lot of pain and trying to get them fitter, which is incredibly exhausting. But I managed to get through it okay. But my legs are sore and my voice is sore. Maybe shouting and cursing at my trainer was the problem. No, I don't do that. Good day, Steve. Nice to have you here, another member of our private group. Thanks for coming along. Thanks. Perfect pronunciation. Good afternoon to you, Light Chaser. Yeah, Madjeri, big fan of gold. Okay, so folks, we start in a couple of minutes, and just greeting everyone, and we'll get something set up here. Let's have a look at what the news is in the meantime, and see if I've got this fancy software working better, which I have. And let's go across here and have a look at what the news is going to produce today. On our economic calendar, and if you need an economic calendar, MyFX Book's a good chance to do it. There's all sorts of other things on MyFX Book which are useful for traders, including a list of brokers, and you can track your own trades here. You can publish your own trades, your own performance, all that sort of thing. But I'm just going to look through here and see what's going on. It's a little bit small on your screen, I know. In about 30 seconds' time, Fed Barkin is about to speak. So it'll be interesting to see what he's got to say. Let's have a look at what's already occurred today, just to set the scene for our stream. Anything from Japan, foreign bonds, 2-year Japanese government bond auction. We'll see how that went. I'm not sure. The price was a bit low, actually, 0.72, the yield, but down. Not a lot there. Bank of England, some speeches there. Treasury gilt auctions, that's already all occurred. Fed Barkin speech has just started. Let's get into the US news and see what's coming up. And perhaps I can just make this a little bit bigger on your screen for you, which I can with my fancy new stuff that I've got working for me here. All right, let's have a look at the US news coming in. So it is Thursday, and in half an hour, most of the news will drop. And let's have a look at what that news is. Of course, we've got, so we're starting in 29 minutes with US GDP growth, which is going to be super interesting, super important. It was 2.4 in the last reading, and it's projected to be negative 0.2. So that's going to be a very, very key number considering economic growth, the projections for the stock market, the bond markets, and the currency, and also what the Fed might do. And if this number is startlingly low, it might put even more pressure on Jerome Powell. We've also got core PCE and PCE prices coming in, expected to be much higher at 3.6% compared to 2.4. That'll also put the mockers on the market if that is too high. And then GDP price index 3.7, retail inventories, I'm not sure if that's going to have a much effect. Goods trade balance expected to be roughly the same at negative 88 billion. Not a good number. And then durable goods orders, defense and ex-defense, expected to be pretty good, I would imagine. A lot of spending been going on, particularly in the defense area. And then continuing jobless claims expected to tick down a wee bit. And then the 4-week average expected to tick up a little bit. And of course, jobs are coming back into vogue now, as we seem to have sort of put inflation slightly on the back burner. It's coming down quite nicely, but the jobless claims are going up, and the non-farm payrolls jobs numbers coming down. And that's going to be the next focus of the Fed. What else we've got coming up today? Chicago Fed National Activity Index. A few more Fed speakers, actually. Fed Harmac later on, or Hamac. Pending home sales, these are going to be interesting. Expected to be negative as well, very negative on the last reading, and then pending home sales also negative. And then, of course, the natural gas stock exchange, we'll come to that shortly, expected 88 billion compared to 95 billion, so a little bit lower, but we don't know what that number will be. It's always a little bit different to expectations. Then we've got the Kansas Fed and various mortgage bonds, etc., etc. So it's all going to be eyes on the job, on the GDP number, the job number. And if you're trading natural gas, you'll be interested in the EIA, Natural Gas Stocks Change, which is coming up later on, a little bit later on, after the jobs and the GDP. All right, so welcome to everyone. Let me just greet everyone. Good afternoon, Stephen, Madhuri, Ritesh, Olay, and Joydeep. And we'll talk about silver, Joydeep, don't worry about that. Let's get into the charts straight away. So let's get rid of this thing on the top here and go straight into it. Right, there we go, perfect. All right, I'm going to start on the left-hand side at the first tab on currencies. And the first thing that I need to tell you about is that this morning, when the euro touched its Fibonacci extension or retracement level, really, the 78.6% Fibonacci retracement level, I got out of this trade completely. At the top of the yellow block right here, and at that's the 78.6% fib. It's also through the top 200 period Bollinger Band. Let me just make sure this is 200, yeah. So that's the top 200 period Bollinger Band, which means we've gone beyond 2 standard deviations away from the mean, and the mean is the 200 period Bollinger Band, 200 period simple moving average, and we have the top Bollinger Band 2 standard deviations away, and the bottom Bollinger Band 2 standard deviations away. So when you get there, there's a very likely or good reasonable chance that we're overextended. It's much like an overbought or oversold indicator, and we've gone through it. So we're overbought from that perspective, and we've also basically completed this pattern. After the big sweep down through the bottom, I said we'd move up to the next level through the top this time. That would be the 78.6% Fibonacci level and the top Bollinger Band. Well, look at where the price got, and I have to zoom in to show you how accurate charts are sometimes, and that's the weekly chart. Let's go to the daily chart, and let me just show you exactly where this price got to. So the top of the Bollinger Band was at 1725. We got out at 1745, right at the top, literally. But look how accurate that is compared to that extension or Bollinger Band combination of the Bollinger Band and the Fibonacci, not extension, retracement level. I had that blob drawn in there from a long time ago. We've now reached it. We've just touched it to, well, the lower part of it. And I still think that we could get even higher on the euro now that we've had the sweep below this impulse move is likely to carry on with more momentum, and we've got quite a lot already. I know that we're pulling back right now. We'll go back to the day and the 4-hour chart shortly, but we've reached our objective, and there is a chance we could carry on moving up. The reason for that is because we've got momentum. We've got the big 1.2 round number just slightly above us. It's only 250 pips above, and that might be a reasonable target for the euro, and it's also a previous resistance and so on like that. Now, going back to the day chart, you can see since we took profit this morning, we've pulled back quite a lot. Now, this is a normal pullback retracement at this point. We've still got an uptrend. If you draw a trend underneath it, we're still above the uptrend. We've still got the 20-period moving average underneath us. That's the short-term uptrend still intact. And of course, the longer-term moving averages all showing that the longer-term uptrend is still intact. So what do we do here? Well, I'd look to buy dips really on the euro, and I'll be looking to buy back down into some of these support levels, a little bit lower down, perhaps down to 1.13, maybe down only to the 20-period moving average and where we got in. And that was 250 pips ago. It looks very small on the chart here, but we made 250 pips from that trade. So a pullback all the way down here is quite a long way, all the way back down to the 20-period moving average, which we could get. Looking at the 4-hour chart, you can see it's been quite a stark rejection right here, and not quite an engulfing candle pattern just yet, and this candle has not closed. This candle closes in 1 hour's time, and we'll see how that candle closes on the euro. In any event, we're out of that trade now, and we no longer have much interest in what goes on until or unless we move out of the current zone into a much lower area or a much higher area, where I'll then be looking to rebuy or eventually to sell, probably closer to 1.2. We also had a long position on the pound, which we took profit on, and that now is also closed, very similar to the euro. We took profit on the pound at the top 200-period Bollinger Band, but it went a little higher. Well, this morning, yes, last night and this morning went a little higher, so we got out slightly prematurely, but nevertheless, we got out at the correct technical level at the top 200-period Bollinger Band. So we're out of the pound and we're out of the euro, and we no longer have long positions on there, having taken really a huge amount of profit there. But we still have a long position on the Aussie dollar, and this one's also in profit, and we still haven't reached D-Day. This is my arrow, which I drew in about a month ago, saying that in order to complete the, I suppose, I don't know if there's a word for it, an adjective for symmetry. In order to complete, maybe it's just symmetry. In order to complete this, what a weird thing. I'm pretty good at English and I just completely forgot. In order to complete the symmetry of this pattern, in other words, the right-hand side is equal to this, basically the length of the left-hand side, we have to get to the 1st of July. Now, I drew that arrow in when we hadn't even really started this right-hand shoulder in this inverse head and shoulders upside down squiggly bracket pattern. I hadn't drawn that. We were over here and I'd already drawn that in there. So we're now getting towards liftoff point, and I'm hoping we can do that. We did have the spike down. I didn't manage to get that extra addition there because we went straight through the top line. I was wanting then to get down to the bottom line to add my new extra position on there. We didn't get there. We only got down to the, not even quite touching the 100-period moving average. So we just left that one position, but that's okay. And we're now lifting off. We got in at around about 0.64. We're currently trading at 0.6530. So we have 130 pips of profit on that trade, but we could have had maybe double that if we had had a new position on there, but we didn't manage to do that. All right, now on stocks. Now, a lot of people are saying, right, we've got a new all-time high. Let's just look at the NASDAQ very quickly to start off with. Let me just show you. There's the all-time high, the top green line, the double top all-time high. We've now broken and closed above there. Did we close above there yesterday? Yes, we did. So we've closed above the all-time high on a daily basis. That's bullish. However, on the S&P 500, we have not done the same thing. We've actually closed well below it still. There's the top 200 there's the top double top all-time high, where the top blue line is, or the purple line, and you can see we're still significantly below it. Well, maybe not significantly, but somewhat. The top line is at 61.54, and we're currently trading at 61.15. So there's still some space to go. I'm not saying we won't get up there, but we could fail at that line or just below, and then see the NASDAQ come crashing down along with it. I don't expect that's the most likely case, and I think that we'll see this market now, having got more long people involved in this market. Those that weren't long will have been tempted by the breakout through the all-time high on the NASDAQ to get long. I have not done done so yet. I'm still fully hedged on the NASDAQ and fully hedged on the S&P and fully hedged on the German 30, but the German 30 has 730 points locked in profit. The other two have very small losses locked in loss. So I'm not convinced that these markets are moving higher, but I do think now that we've broken out through the top, there'll be a lot of release or liquidation of those short hands, and there may be some addition of some extra long hands. Algorithms, I imagine, will have triggered a few buy orders at that level on the NASDAQ too. So there should be a little bit of a flurry of buying and holding at these levels, and we should see, if the NASDAQ manages to hold its level, we should see the S&P eventually get to its all-time high and then break up through there. If it doesn't manage to do that and moves down, the NASDAQ might be in peril at the same time. However, we need to see these lasting around these levels for about a week or maybe more. I'd prefer about 2 weeks, really, above that all-time high breakout for us to be convinced that the NASDAQ and the S&P are now no longer in a bear market rally or a dead cat bounce, but that all ends when we break up to new all-time highs, which we've done on the NASDAQ, not in the S&P. So in short, I remain hedged on the NASDAQ and the S&P and the German 30. And I'll be looking to take at some point, and I don't know when this will be. It might be today, it might be next week, it could be the following week or the following week. But at some point, I'd like to take off the long hedge, take profit on those orange arrows, and I don't know where the price will be. It might be below where we are right now or above where we are right now. But I'd like to take some profit on the long hedges, the orange arrows on those two charts, and then add some shorts to the existing shorts and then ride this down from a much higher level. So right now, I'm fully hedged on both of these. S&P has not reached its all-time high. The NASDAQ has exceeded it and broken above it. And on the German 30, almost the opposite picture. We got up to the top of the channel line, and I posted this up on X, and I've talked about this quite a few times now. A beautiful technical trade. We sold at the top of the channel. We also sold on the previous occasion at the top of the channel. We got all of that profit on the move down on the previous occasion, and we got all of that profit on the move down on this occasion. What we did was, when we got to the 50-period moving average, the red line down here, which is the medium-term support level, the green line, the 20-period moving average above us, is the short-term support level or resistance level. Resistance and support, they can be both. And when we broke down through there and got to the 50, I took profit on the short trade and added a long position. So in other words, swap, stop, take profit, and reverse. Immediately we reversed, maybe a couple of hours later, not instantly, but a couple of hours later, and we moved up back to the 20-period moving average, which is now resistance. It was support, and that's now resistance. It was support all the way up here, if you can see on the left-hand side, 20-period moving average, beautiful support. And often it is. You can see all the way up here too. And then it became resistance underneath, just above where we're trading right now. And that's where we got out of this the long trade. Now, when I say we got out, I didn't take profit. I placed a hedge here. So we have that long position still open, and we have a short position now open on the hedge. That's exactly equal to the size of the long position. And that has locked in 730 points of profit. And no matter what happens next, when, I don't know when that will be, I close both of these positions, the long and the short, I will realize that 730 points of profit. However, by keeping this open, there might be something interesting and extraordinary that happens over the next few days, particularly with what's going on with Russia, Ukraine, Israel, Iraq, and the Trump White House. There's all sorts of opportunity for really weird and strange and different types of moves. If that was the case, whilst I'm hedged, it makes no difference to my profit or loss. This could spike up by, $5,000 or down by $5,000 and make zero difference to my position. But if it does that, I'll have the opportunity to do some pretty nifty and fancy trades, get out and into hedges and manage to take profit based on the volatility that we see. So that's my plan. That's why I have not closed the German 30 and taken profit, but that profit is completely foolproofly locked in. I'll never lose that profit unless I do something weird and I take one side of the hedge off and not the other side, and it goes against me. So a lot of talking about those. Now, a couple of other names. We've also got longs on MSTR, Tesla, ArcK, Nvidia, and I'm looking to get long on QBTS. I'll start with QBTS in the beginning right now. and tell you what I've been thinking. So I don't know if you remember that we got long on QBTS on that breakup. This was a few weeks ago now. I think we traded this live on one of our YouTube videos, but we certainly covered this in our live members trading group. And I did put this up on X a couple of times as well. But we got long there on the gap up after having broken out of this rectangle. And really pretty simple, just not really a bull flag because it's angling upwards, but we broke out of it anyway, gapped up above it. That induced me to enter a buy. And the moment we got up here, and I can't remember the reason, I think it was just because we got to 20 really, we took profit, and that's it. I'm now waiting for a dip back down. You can see my green arrow. I had drawn this green arrow in, by the way, when I took the first trade at the, I'm talking about this green line arrow. I drew that in when I took the very first trade in the long direction, this first long trade. I drew that in. I had already planned that in advance for the take profit and retracement back down to the breakout point and the 50-day moving average. That's right here at this point. I wouldn't be surprised if we dip back into it a little bit further, but we need to close this gap first. So we should get at least to, let's say, $13.40, but I expect we could get lower down to about $12, maybe $12.50, and then bounce back up again. So that is working out absolutely perfectly as planned and as I traded. We got long, we got short, we took profit there. We actually did get short, by the way. I forgot about that. Someone's just reminded me. We did get short at the top there, actually. We took profit right back down almost where we got in. So we took a long, we took a short, and we got out of the short over there. We're now looking to go long again back into that zone, which I discussed earlier. So that's QBTS. We don't have a trade on that just yet. That's the quantum AI stuff. I think that's pretty exciting. And although it's an incredibly messy chart, there's opportunity there. And then we're also just simply long on MSTR, these tech names, Magnificent Seven type names, MSTR, Tesla, and NVIDIA, all going fantastically. NVIDIA was a wonderful breakout yesterday. And well, just not quite yesterday, a couple of days ago, but we had this ascending, rising triangle. We got long at the top of it, could have got long at the bottom really, but it was more or less at one point just moving sideways across the page with a very minute range, and it's squeezed out through the top. So we're fully long on that one. We've got a decent position on there. We're also long on ARC-K, the technology stock, and well, we got long at the basically a pretty similar pattern almost to what we're looking at QBTS. A rising rectangle, rising channel. So it's not a flag, it's going the wrong way, but we broke out of it. We got long right there at the 20-period moving average on the pullback, and we're still long. We haven't changed this. We got long at, I don't know, $60. We're trading at $70 now. So that's a great trade. And a lot of rush into some of these risk on names, and I'm not sure if it's sustainable. We've got to be really careful. But look at NVIDIA in the pre-market, $156. We closed at $154. That's already $2 or $3, $2.50 up from where we closed. ARC-K moving up. Tesla floundering a bit, actually. Not too sure why flounder Tesla'd back. I believe there's something like 400,000 robo-taxis. I don't know, you can comment in the chat or in the comments. 400, is it possible? 400,000 autonomous driving Teslas in the US already? I didn't know it was that much. Nevertheless, Tesla failed a little bit yesterday, last 2 days really. Don't quite like that, but just down to the 200-period moving average and to the breakout point. So once again, we've got a big breakout, a pullback down slightly lower. That was the Liberation Day drop, and then another pullback now, but maybe this is just the real first pullback. Let's ignore the Liberation Day drop, and we're now just pulling back down to the 200 and the 50 and the 100-period moving average confluence, and those should provide firm and decent support for Tesla if these markets are going to carry on going up, which they do seem to be doing. And then MSTR, the Bitcoin Treasury play. Well, if Bitcoin goes up, this should go up along with it, and Bitcoin is going up. Today's looking a bit weak, but we have made a new higher high today compared to yesterday, but it's pulled back a little bit. But as long as Bitcoin goes up, MSTR should too, and we've got a decent long position on here right from the bottom at about $364. We're trading at 386 now, so $20 profit on that one too, and so good all around really, except for the fact that we don't have longs on the NASDAQ and the S&P. We've got our profit locked in on the German 30, and The only thing that I rue really is that we just don't, we're not in the wrong direction on the NASDAQ and the S&P, but we're not in the direction at all. I'd rather be long on these right now, but I'm not. But second best, we do have long hedges on these trades, and that means I'm building up a positive position on the NASDAQ and on the S&P, at the same time dragging the negative ones behind, but that's okay. At some point I'll be able to take profit on the positive positions, add to the negative losing positions, and ride it back down. We've had 2 years of massive rallies, big moving higher years on the NASDAQ and the S&P, and normally the third year, after 2 such massive, such bullish, such strong years, the third year won't play out quite as well, quite as easily. And it might just be a sideways year, which I posted and posited right at the beginning of the year. And I said, we'll probably just trade right across the page this year between the high and the low of the year. And if you look at the NASDAQ, although we've moved slightly higher, we could use the S&P, might be a better example right now. So there's the low, the Liberation Day dip down to 4,800. There's the high at 6,200, 150 roughly, just rounding them off. So 4,800, 6,200, that could well be roughly the range for the rest of this year, and maybe even the rest of next year. Sometimes these doldrums do last for years and years and years, and we'd see the same on the NASDAQ and the same on the other indices as well. There's the low of the NASDAQ, 16,000 and some change. There's the high, 22,000 and some change, and maybe we'll be trading roughly within this region for most of the year. What we can do is look at the top and the bottom Bollinger Bands, and if this market starts trading sideways, the Bollinger Bands will start trading sideways, and we'll simply trade from Bollinger to Bollinger for the next 6 months, 12 months, 18 months, 24 months, who knows. Alternatively, if we're going to carry on moving up, and that's my target for the NASDAQ, by the way, the top Bollinger Band and the channel center line, if we keep moving up and bust up through there and get up to my next target, then we're not in a ranged market, and we re-entered and resumed the bull market. And that could take us all the way up in the next year, actually much less than that, 2 months, maybe, something like that. That could take us, maybe even less actually, could take us up to 25,000 on the NASDAQ. We're currently trading at 22 and some change. So do I know what's going to happen next? No, I have no clue, honestly. Does anyone else know? No, I've been listening to some of my favorite analysts. Some of them are my friends. Some of them I speak to quite regularly. And they're all feeling exactly the same way. Bullish on the markets. Let me rephrase that. Bearish on the markets, but bullish in practice until proven otherwise. So we have to remain bullish. That's why we're bullish across a whole spectrum of names. MSTR, Tesla, ARK, NVIDIA, looking to buy QBTS, locked in profit on the longs on the German 30. And now we're hedged on the NASDAQ and the S&P, looking potentially to get long for those higher targets. So although I'm still undecided at best, and maybe even still bearish on the markets, we have to remain in the direction that the charts are taking us. Charts are always right, and therefore, in general, we're long across the board on the stock markets. Phew, all right, now then. Having said all of that, because we're long on the stock markets, we should try and remain long on crypto, Ethereum, Bitcoin, and XRP, and we have done so. I've covered this many times over the last few days in my videos, so I'm going to cover basically Bitcoin, and let's talk about it. We'll talk about the others quickly as well. Here's Bitcoin trading in this beautiful bull flag, a little bit too neat. We got down to the bottom, 2 touches at the top, 2 at the bottom. I talked about this ad infinitum so far. We could still get another dip down to the red trend line, the 200 and the 100 period confluence. That would now only take us back down to 98 or 100. But if we close below $100,000 per Bitcoin on a daily basis, I will hedge my entire Bitcoin position, which is quite large right now. So I hope that doesn't happen, but it might do. But for now, I'm long on Bitcoin. I'm long on Ethereum. I like the bounces on all of these cryptos. I like the bounce here off the 100-period moving average and the rising trend line and the order block on Ethereum. Also flagging a little bit today, but a beautiful, almost V-shaped recovery. Bat, just up to resistance though. The underside of the pink zone here, that's the power zone, the 200-period moving average, the 50-period moving average, and the 20-period moving average, all on top of each other at the Fibonacci retracement level and at the order block. So that's really tough to get through, really, really tough for Ethereum. And as you can see, it agrees with me. Struggling to get through there right now as we speak. As Bitcoin's also floundering a little bit, But generally, I'm not worried about these are just intraday moves up and down. And then on XRP, well, basically a big bull flag. And I have to say, if you're an XRP bull, you might be a little concerned that we may have to complete this bull flag and revisit the bottom of this channel, which is miles and miles below us. That would take us down, if we got there right now, today, down to 1.35. And if that took us another month or 2 or 3 to get there, we could get all the way down to 1.15, 1.2 if we reach down to the bottom of this channel, which is a bull flag. So I don't think that's going to happen, but I always have these notions in mind just in case they do happen, because sometimes they do. Even if you think they're not going to, I don't think it's going to, but it could. And that would look like something like this. We could even move up to the top of the channel first and then down to the channel center line, bit of bumping around. But we could do that on XRP before the next move up. So be very, very careful of that. Don't go all in on this one. Even if you're a Bitcoin bull and a crypto bull and an Ethereum bull and an XRP bull, make sure that we're trading at $2.16 right now. If you're heavily long on this and it drops down to $1.16, you may well be wiped out. So it's all very well just going all in on XRP like many people do, but be aware that if you go all in and your account can't sustain that, you will be cleaned out. And it is looking a little bit negative. And on all of these charts, we've still got higher, on all of these charts, Ethereum, Bitcoin, XRP, we've got lower highs and lower lows on all of these charts. Look at that. Bitcoin, lower low, lower high, lower high, lower low, lower low. XRP is the same on the right-hand side there. And then Ethereum, not quite as bad actually, just sideways and a dip. But XRP, similar thing. In fact, much worse than the others, constantly lower lows and lower highs. Although, and we've got a slightly higher high on this occasion, quite a lot higher. We haven't gone down through that level just yet. Right, on gold and silver and copper. Gold, we're still short. All right, so there's the gold chart. We took some profit here at the bottom of the spike on that candle. That was at about, I don't know, 3,300, I think it was, almost precisely. And we're retaining 25% of our position on this trade, short, and my target is down here at the green blob. I've got to move all of this stuff along now because I drew these lines a long time ago, and you can see that we've gone sideways rather than down. So we're not going up, but we're not going down, and we're not going we are going sideways. So I'm still thinking along these lines. We're sort of following this green path so far. That I drew this in a few days ago. We didn't get to the top. We failed there, just above the 78.6% fib. And a decent pullback. Gold does this. It will trade generally in a bull market for a few months and then go sideways for a few months, bull market for a few months, sideways for a few months. So, and what they might call it, it seems to be one of these new fangled trading terminologies called PIT, pullback in time. In other words, for these moving averages to catch up, rather than the price pulling back, retracing down, reverting back down to the moving averages, the price goes sideways instead, and the moving averages catch up rather than the price going down to meet the moving averages. That's called PIT, pullback in time. Call it what you want. I just say we're going across the page, and eventually at some point we're going to get to the trend line. We almost got to it a couple of days ago. And when we get to the trend line, which is rising, pullback in time, the trend line's rising, we're not. And we're not going down, we're just going across. So the trend line's rising to meet the price. And when that happens, either we'll move down through it or we'll bounce off it and move up higher. Really pretty much as simple as that. We haven't quite touched the trend line yet, and we have to get there probably before anything happens. My best case scenario is a move down to about $3,000 plus minus $50 or $100, and then down to probably less likely, but always possible, down to about 2,700 or 800. But for now, I think this is the most likely scenario, the 3,000 plus minus level. But it all depends on what happens at this trend line, at these Fibonacci levels, where we pull back to. We've taken some profit. We're in from about 3,300 and something. That's our average entry price, so it's quite significantly above us. So we can get out of this at break even if we need to. We've got very little or no risk on this trade. And at the same time, we're also long on silver. And the silver gold ratio is improving. It's now at 1.2 or something, 1.1. And from time to time, it spikes up to about 2. And if you just divide that's percentage. And if you just divide the gold price by the silver price, you get a percentage. And that's around about 1% right now. The average, I think, is around about 1 to 1.3%. And occasionally we move up to 2%. In other words, at 2% of the current gold price, the silver price would be at around $60. We're currently at $36. So silver definitely has potential to move up. The silver gold ratio chart is moving up. We've been short on gold, long on silver. This is our 5th time we've done it, and we've taken profit on both of them, on the short golds and the long silvers simultaneously, and we're about to try and do the same thing again. We're in profit on our long silver. We have a long position from right down here at about $31. We have a new position we added a few days ago, about a week and a half, at $36, and we're currently trading at $36.50. So we have a very big profit on our silver long trade, although it's not as big as our short gold trade. It's slightly differently sized, but we have much more profit in terms of percentage on gold than we've made on silver than we've made on our gold shorts. But nevertheless, we've made profit on both of them simultaneously. So I'm pretty happy with that. I'm also very happy with copper, by the way. And copper is about to, if we can keep this up, perform its highest weekly and monthly close of all time. And that level is where we are right now at $5. If we should close above, and we are above $5 right now, and we're on the daily candle chart here, if we should close above $5 tomorrow, that's Friday, we will have performed the highest weekly close in the history of copper trading. And I made a comment in my, and you know, copper's just a very useful metal. It's used in so many different things, and it's so cheap. It's so useful, and it's so cheap. And I think it's going to move up in price. There's going to be more and more demand for copper, more demand for electricity, more demand for AI, more demand for chips, more demand for weapons, more demand for robots, batteries, cars, all of that sort of thing. Copper's involved in it. And so I think we could perform the highest close ever on a weekly and monthly basis on copper, and then move up much, much higher. And who knows where we could get on this? Maybe $10. Who knows? We could double. Why not? We've doubled other things very quickly in the past, and copper is a very useful metal, and it's still incredibly cheap. Although it's not that cheap, because in South Africa, people steal the copper lines from street lamps and various other electrical devices in the streets, cameras, street lamps, pedestrian crossing things, all that sort of thing. People steal those, cut them down at the base, rip out the wires, cut off the plastic or melt it off, and take the copper strands out from inside and sell the copper to scrap dealers. And maybe they might get, I don't know, 200 grams of copper out of a street pole. I don't know, something like that. I can't imagine it's much more than a quarter of a kilo. Maybe I'm completely wrong. But if it is 200 grams of copper, there's not much money involved, but it's enough to make people want to steal it. So it does have some value. Anyway, that's copper. So we're long on copper from quite low down. We're long on silver from very low down. And we're short on gold from quite a lot above us. So all of these metals positions are looking fantastic. We're also long across the board on Ethereum, Bitcoin, and XRP. And my Bitcoin positions actually start all the way down in the low 70s. I've got a big cluster of longs from up there, and I've got a big cluster of longs I'm building up in this bull flag. If this bull flag fails, in other words, why I would take my Bitcoin positions and hedge them in entirety is because that's what we have. That's why I have a cluster of positions up here, because it's a bull flag. The moment that bull flag fails to be a bull flag, my reason for keeping these clustered positions on at the top here starts to not exist, and I have to take view of that and then obviously hedge that position, get out of it. I choose to hedge. I could just take profit if I wanted to. I generally don't take profit on long Bitcoin positions. All right, now going across to energies, we're still no trade on URA. We're going to look to buy URA back into dips. We've taken profit. We got long closer to 20. We got out closer to 40. I'm looking to buy dips down into around about 31 to 32 or around about 30 or just below. This is my favorite area to close that gap in the middle of the page and to retest the 50, 100, and 200 period moving averages down here below us at around about 28, 29, maybe 30, 31, but in that vicinity. I think we'll have to close that gap, and that will be in my next slide. There's another little gap just below us over here too. So 2 little gaps to close, and then I'll be rebuying URA. But we're still long on UEC. This is the other uranium instrument that we're in, and I have a long position from down here at 472 and one from $6.40 something. We're currently trading at 679, and I'm holding on to those long positions in lieu of the fact that I've taken profit on URA, and I'm now out of that one, but holding on to some uranium longs in the form of UEC. On natural gas, we did a bit of jiggery-pokery this morning. As a result of all of that, nothing occurred at all. We basically went long and then hedged our longs with a short almost immediately thereafter, 2 cents apart, after having spiked up, moved down, fiddling all around, and maybe, just maybe, we've got a one up, one down, maybe 2 one downs and a one up candle. This might be our trigger to release the short side of the hedge and add back onto the longs. This is not a big position, by the way. It's only 25%, but we could add a little bit more on. If this candle now reverses, this candle closes, it's 1400 hours. We've got 3.5 hours before this candle closes, and so we won't do anything until 3.5 hours has passed. But if that does occur and we have a sort of a spike down and a spike up, I'll probably exit the short trade on this hedge and add to the long side and see if we can ride this up through this falling wedge and a break up through here, maybe back up to the 200 period moving average and around about $3.75, the key and important level on natural gas. In fact, so important, I'm going to draw a block in there just to remind everyone of the 375 level. You should always have a block in at 375 on natural gas. It trades around that level so often and so much. So that level there's even a little gap there and a little spike high. So that level there is probably my target. There's the 200 and the 100 period moving averages, but that's only if we can perform a reversal here. I'm not convinced of that just yet, and we do have to wait another 3.5 hours before we take any action on that candle. So that's natural gas, looking for a long back up to 375, and if we get up to 375, up to the zone here where the 200 and the 100 period moving averages are, and the key 375 level, I'll then definitely not exit my long trade. I will consider exiting my long trade or consider hedging my long trade at that point. Right now, it looks like we rejected the top of the falling wedge yet again, and well, we'll see. You know, this candle really needs to close as a doji and not a bearish candle in order for us to get long and exit that short hedge. Right now, it's forming a reversal bearish candle. It needs to be a doji candle with a very small body. Right now, that body is too big. On WTI oil, we're still basically short, but now we've only got a 25% position left. We've taken profit on our shorts all the way from the top here, one position from 75 and a bit, one position from 73 and a bit. We got out down here at the orange arrow at 63 and a bit. At this market structure break, my previous blob, the 50 period moving average and the channel center line, that's this dotted thin blue line in the middle here, a perfect support level where we have now got out of basically 75% of our position. I'm holding 25% for the dream, for a move down through this order block, back down to, bear in mind, we're now back below Moab. I must point that out, very, very important. The fact that we didn't get back up through Moab and failed to push up through there once again means that we're still looking pretty weak. Not ruling that out, and I'd like to sell some more at about $67 and maybe closer to $70 if we get the chance. I'm holding the 25% because I'm not sure we get that chance, and if we don't and we carry on moving down, I don't want to miss out on the next leg down. So we've taken most of our profit, keeping 25% on. And that's all the energies, folks. And then going across to TLT, I posted this up on X this morning and said, should we, could we, will we rally up through all of this stuff above us? There's a huge amount of traffic here on Treasuries, and whether we, despite everything, despite all the negativity about Treasuries and the bond yields going through the roof, this does look quite bullish to me. We've got 2 falling wedges on different time frames right here. If I switch this to the weekly chart, it looks really good to me. And my gut is saying this should be bearish. My chart is saying this is very bullish, and a breakout through all of this. The 20-week, two separate falling wedges, the 50-week, the 100-week, all straight above us. And if we go to the day chart, you can see it's a similar sort of picture. We're above the 20 and the 50 already, by the way, on the day chart, but we've got the 100 period, one trend line, the 200 period, another trend line. Both of these trend lines are part of falling wedge patterns, and there's a lot of traffic to get through. Probably some other things as well, horizontal lines, Fibonacci levels, etc. So the question was, should we hold this? Is this going to eventually break up through here? Will there be some untoward movement higher, or am I just delusional? We're pretty close to break even right now, and I really don't know what to do. I'm very tempted to say the chart's normally right and not the fundamentals. The chart's telling me this looks really bullish. I like this ascending triangle that we're busy forming on the daily chart too, so it all looks good. I'll probably hold on to that trade. At the same time, we're long on the dollar South African rand. That's moving sideways. No reason for it to be here. Continue to think that's going to squeeze. VIX waiting for a dip down into 13s, 14s maybe, but 13s and 12s. I'll be looking to buy VIX. We're getting there, almost there. And then the US 10-year drifting down quite nicely, and back, ignoring that sort of tariff whipsaw, Liberation Day whipsaw, ignoring that, it's not looking too bad. An extended right-hand shoulder, perhaps. We could actually just pull this along now and maybe adjust this into a very skew head and shoulders pattern. We could even absorb that whipsaw and make an incredibly skew head and shoulders. But let's just ignore that and make it a normal head and shoulders pattern with a very long right-hand shoulder. A little bit too long, but that's okay. We're still holding the whipsaw in bay. And if we break down through that level, incredibly key level now, the 4.14 level on the US 10-year yield. If that gives and breaks, we should see the Treasuries surging upwards. I don't know if that's going to happen. And then finally, folks, going across the softs and grains, we're still long on sugar, forming this reversal lozenge, which has now become less lozenge-like as we've gone sideways. We're long from the bottom there, looking for this to move across and upwards, eventually through these trend lines. This is a falling wedge. We have a long position from slightly higher up, one from there and one from there, and one from in between, really. So yeah, I think this is really it's either going to go down, in which case we'll have to hedge, but I think we're trying to form a base on sugar right there. We'll see how we go. And I think this week will be pretty telling on most of these, because they're all at kind of inflection points. Cocoa, not really, not so much. Still short on cocoa, looking for this to move down, following its path down to the yellow zone, but it's just moving sideways. And someone asked me yesterday or this morning, why have I just been so flippant about cocoa? Well, I've got bored, really. We've been short on this for a long time now. We've taken profit at the bottom here on a number of occasions. And, looking at this chart, this doesn't look all that boring at first glance. But if you look at where this chart begins, this is August 2024. This is a year's worth of trading. And apart from a couple of profit takes down near the bottom here, that's all we've managed to get out of it. So it's been tying up capital for very little benefit, really, or any progress. On the other hand, coffee has been pretty good. I think I'll probably get out of this one soonish as well and use that capital for other instruments that are more exciting, particularly the Mag 7. If we do get a wiggle on stocks, on Bitcoin, on things like QBTS and ARC-K, some of these exciting names, I'd be more interested in actually stripping out some of my holdings in some of these softs and grains into some of those other names, but we'll see. Nevertheless, I think we'll just wait for us to get back down to the channel bottom here. And if we did that over the next couple of days, that would be around about 300. Might just get out of coffee at that level. And maybe we'll get a bit of a bounce we can sell later on. Not all that exciting, really. And then corn's also just been annoying. We've got a long position. Once again, we've been long several occasions here. We actually got long right at the bottom on corn. We took some profit early by mistake. We then managed to get back in over here. We didn't trade this particularly well. We took some more profit over there after getting short at the top again. We got short here, and it's now moving down. So really messy, and probably just a waste of my time and energy, really. And then soya beans, we have no positions on soya at all, moving literally perfectly sideways, rectangularly across the page. Not interesting. If you're going to trade that, you may as well sell the top and buy the bottom. So we've already come off the top on soya. There's no space for this there's no opportunity to get into this now. We're halfway down, but, buy the bottom, sell the top sort of thing. Range trade that one if you must. And then wheat, people are saying, well, wheat's collapsing back into its channel, more like a fake out than a breakout. I disagree. That line is now broken. Doesn't matter the fact that we've pulled back in. We've only come back 61.8%, not even yet. This is the major support level here at the 50 and the 618. This is the golden pocket, the blue level on your wheat chart, and we're right in the middle of it right now. And I would be very surprised if we didn't find some support here. In fact, we could get all the way down to the 78.6, but I suspect not. And I'll just put a little black line in here just to show you there's another sort of little place where we could maybe just get down to that little trend line. But this is the right sort of zone to be buying in. I do believe wheat has broken out. I don't think that's a fake out. I think as long as we're above that rising trend line, the 78.6, 50, 618 in the golden pocket around here, we should lift off and eventually break up above the trend line again. That will be the second breakout. We should hold that. And in that case, I'll probably add some more to my wheat longs if we do manage to do that. I haven't added any more at this point. And on orange juice, we have no positions. We were short all the way from the top, but we only took about, we got out about halfway down. We didn't manage to get the entire move. And since we got out there at the bottom of the pink zone, we've started ranging and we've moved back up to the pink zone. We didn't get short again, and we've been moving sideways, very much like some of these other names like soya and so on. And even corn and cotton, also very sideways. I do like cotton, one of my favorites once again. This is a big reversal pattern. It's a very clear reversal pattern through the channel. All sorts of indications here that this is bottomed, double bottom over there, and moving sideways to up, having broken out through the channel and moving across, consolidating and accumulating for the next move up, I imagine. So that's all those softs and grains, and that's everything I've got for you today, folks. I've spoken a lot, I know, and I haven't given you much chance to ask any questions. So let me get to that. I'm a little tired. You might pick up today, a little worn out, but that's okay. We carry on. We've got trades to trade and markets to make. So that's what we're here for. So even when we're a little tired, we need to push on, forge on, be resolute, shoulder up, man up, and keep on with our work. That's what we do. We man up to our responsibilities. We take responsibility and we get on with it even if we're tired. So, and old. All right, Joy Deep, I think we've spoken about silver. Just going through some of your questions now. Thanks for being here. Ole, thanks for being here from Germany. Thank you. I appreciate that very much. Jazz from California. Oh, I wondered where you were from, Jazz. California. I watched a lot of California YouTube stuff, Jazz. I watched the Wedge at Newport Beach. There's a channel called, my favorite channel is called, I'll tell you right now, it's a bunch of guys that surf Newport Beach, the Wedge, and they skimboard. Incredibly dangerous and difficult and exciting wave to ride. It's called Skid Kids. It's called Raw Beefs. Raw, RAWBEEFS. Raw Beefs, and they surf Newport Beach all day long, every day. That's their YouTube channel. I think that's their job, actually, just surfing, skimboarding at Newport. I love it. I watch it as much as I can. That's California. So welcome to you, Jazz. Good day, Michael Sauvage. Added another scoop of silver today. Well done on you, Michael. I think silver's a good one. And I think silver, I don't know if you guys remember on X about a year ago, maybe it could have been slightly longer than a year ago, I said, I think silver's got a chance of going to $55. And we were trading at like 29 or something then, somewhere around there, pretty low. And everyone kind of laughed at me, and actually copped some abuse on X about that. And I wasn't quite sure why, because I still think that. I still think silver's got a chance of moving much, much higher up into the 50s. And I stand by that and I stick by it. So well done if you're still long on silver. Good day, Martin Wolfbauer. Good day, Sean May from Florida. Yeah, Sean, there's a guy from Florida that I watched on TV as well, who surfs around that zone. Surf's not very good in Florida, pretty weak, not great. But what he actually does is he actually surfs behind. You get a lot of shipping in the sort of inlets and in between the keys and that sort of thing. All those sandy beaches and these big ships, cruisers, tankers, tourist ships, all come quite close to the shore, and they create this shore wave, and they surf that in Florida, which is also awesome. All right. Enough of that now. Fariba Bahrami. thanks for being here, Fariba. In your experience, does Arabica react to US dollar prices? Yeah, well, I mean, Fariba, coffee is priced in US dollars mostly. Most of the coffee markets are in US dollars. You can trade coffee in other currencies, but mostly it's in US dollars. Yeah. So being the most important commodity for currency for trading commodities, it's a commodity in itself, the US dollar. So we normally, all the coffees, all the cocos, all the softs and grains, we price in US dollars. You may price it in something else and trade it in some other currency. That's okay. People sometimes like to do that. I don't understand why. I don't know quite why you would want to trade coffee in British pounds and try to evaluate that on a chart if most of the eyes worlds are on Arabica versus the US dollar and they're trading that and the market's reacting to those levels. I don't know why you would trade in other currencies, but people do it. People do like trading in their own currencies or different currencies, or they just don't want to hold dollars. That's another reason. So, yeah. Inconspicuous Alien, thank you for being here. And NK Upal, thank you for being here too. Inconspicuous Alien, you have a question. Someone's going to have to fully explain hedging. It sounds like edging, but with money. Right, I haven't heard it put like that, but it is a way to put it, I suppose, and there could be parallels drawn, I imagine, but I don't want to go down that road right now. If you'd like to learn how to hedge in Conspicuous Alien, go and learn how to do it. There's plenty of material on how to hedge. If you want to learn from me, I've got material and courses on hedging, on natural gas and other instruments. You can check out the link below on my website. Do you need two accounts in order to hedge, you ask, Inconspicuous Alien? In the US, you probably do need two accounts because for some odd reason, US authorities don't allow brokers to offer hedging in the US. So there's a very simple way around it. Open two accounts with the same broker, trade one short, one long, or you can have the same trade with different brokers, one short and one long. It doesn't really make any difference. Or you could hedge with options, or you could hedge with a completely different instrument. You could be short gold, but long silver, like I am currently. That's a form of hedging too. So it's not only just taking the opposite trade, or the opposite direction on your current trade position. You could do it with different instruments, a different account, options. You could hedge with a different instrument altogether, a correlated instrument. All right, NK, your question is, the head of the, or comment, head of the federal government agency wants the mortgage giants to consider accepting. So basically, I mean, this is not through NK, but basically when you buy a house, or sometimes when you open a trading account, if you want to be considered a high net worth individual in the US, you have to have a certain amount of money, normally $1 million in your assets. And crypto holdings are not considered assets currently in the US. It could be a house, it could be physical gold, it could be other assets like cars, paintings, artwork, any other asset that you've got in a trading account, whatever it might be, but not crypto and not Bitcoin. And I think this refers to Bitcoin only, not crypto, which is different to Bitcoin. And it's a proposal at the stage, it's not through. But what that means is if you've got $1 million in Bitcoin and you want to buy a house for $1 million using that as collateral in the US, up until now you've not been able to do that. But from now on, if this goes through, the banks will consider your crypto, not crypto, Bitcoin holdings as assets against which you can borrow in order to get a mortgage on a property. I think that's pretty good news for Bitcoin. How long will this take to impact the crypto prices? It could take a day, it could take a year, it could take a decade, or it could have no effect whatsoever. Light Chaser, thanks for being here. Cocoa also has issues with weather. Rainfall is low, might impact production and price might rise. Cocoa's big problem, Light Chaser, is not weather per se, although there have been weather problems. And not only too little rain, but too much rain, causing rotten beans and so on. But it's not, I have a little bit of inside information on this. it's not the main reason that the cocoa prices have been so cornered. Cornering the market is when someone gets hold of most of it and buys it all up and prevents everyone else from getting hold of it, and the price rises because of shortage of supply. And when the price goes up, they release all of that unreleased cocoa back onto the market at the higher price, and the price drops eventually. We're still at those very high prices. I don't know exactly what's going on. That some of that certainly took place. Of that, I'm like 99% sure. So, and it looks like some of that manipulation is still there. It's in all. This is Africa, folks. It happens in Africa. This sort of stuff, particularly in West Africa. Don't be surprised. And I think I kind of know what goes on in Africa because I live here. Greetings from Lake Placid. Wow. Greetings to you, TDC. I've never met anyone from Lake Placid, I don't think, so that's wonderful. You like that light chaser? What is that? I don't know what you're referring to, but can't remember what we were talking about. Cocoa. Oh, yeah. Right. Rusdi, thank you for being here. I appreciate your presence and your visitation. Your question is this: when hedging, why not just get out of the position? It seems a little counterintuitive. You're using twice the capital to get the same effect. Okay, yeah, there are all sorts of reasons why hedging is a very, very good idea. I'm going to try and pronounce your name correctly. Rusdi Doughty. Rusdi, let's go with Rusdi. There are all sorts of reasons for it. First of all, it buys you time. Secondly, it buys you psychological peace of mind. Thirdly, it gives you the opportunity to evaluate the market from both sides, not looking at it from your side, but looking at it from the opposite side too. Also, it gives you flexibility, and it gives you opportunity to make more money outright, because often what I'll do, if you don't have a full-size position on and you're looking to DCA into a position, you can DCA into a position and be hedged at the same time and eventually take profit on the hedged trade positions that you've put on. In other words, if you were short, DCAing into a short as the price rises, but you have a long hedge on at the same time. At the final point, when the market does turn around, you add your final DCA in, you take profit on your long hedge, you get that extra money, which covers the risk, some of the risk of the extra trades that you've added on and the downside that you've got to cover, and you're on your way. That's at least 5 good reasons to hedge. I think there are more. Those that are in my private group and hedge regularly, daily with me, not every trade, not every instrument, but some trades, some instruments. Hedging is an absolute lifesaver. And the sooner you learn how to hedge, the better, in my opinion. And it may be counterintuitive. And I think also, if you don't really know how to do it properly, you may get into some trouble because it's not as easy once you're in a hedge to know when to get out. And it's when you get out of the hedge that most people fail at. But if you join my private group or you take one of my courses on hedging, you'll learn how to do it perfectly yourself. So there you go. Folks, if you're enjoying this stream, please subscribe right now. There's a button below that says subscribe, and there's a like button. I'd really appreciate it if you press those buttons yourself right this minute whilst you're still here and whilst I'm still here. And that would really help support the channel. And if you'd like to learn more about these things, and I really don't want to advertise too much, but if you'd like to learn how to trade natural gas, learn how to hedge, learn how to swing trade commodities, I've got courses on those. There are links below. And there's also a link below, which is free, which says, let me just point it out to you. It's right below. It says, access your Trader's Survival Kit now, free. And in that kit, you can read below, directly under this video, in that kit, there are all sorts of free tools. I'm just giving them away to you as a kind of sneaky bribe, really, to get you interested in my streams and my products. But it's all free. And in there's stuff on risk management, stuff on the G7 trading system. There's my entire AI trading song library. And there's a few other things and discounts off all my courses, every single course. There's a 20% discount. And it's all free, folks. There's a link below this video. You can click on it right now. It says, what does it say? It says Arcis Trading /survival. Arcis Trading /survival. The link's below, and it's free. I'm not asking you for any money. But if you do choose to purchase a trading course and want to learn how to hedge or swing trade, included in that package is a 20% discount, and it's valid for a month. So all the tools are there, all the opportunities. So Rusdi, I think that's kind of a long answer to a short question. Why hedge? But there is, there's a lot to talk about in hedging and the techniques on how to do it, when to do it, what instruments, what situations. It's not all that complicated, but if you don't know what you're doing, you can get yourself into an awful lot of trouble hedging. But I do think there are probably at least 7 really good reasons why you should learn to hedge and why it's an exceptionally important part of anyone's trading toolpack. Yeah. Light Chaser, also trying to learn how to hedge. Folks, I really just encourage you to just purchase one of the courses or just join my private group. Really, literally, and I've said this for the last 3 live streams now, I'm getting people with these big violent moves in the market. I want you to listen to me now. These big moves in the market, big volatile moves. I've had loads of people contacting me saying they've blown their account. What do? They're short on the NASDAQ from 20,000. Should they carry on holding? Or they're long on natural gas from $4.20. What should they do? All sorts of people, and I get it all day long, but particularly right now with these quite volatile moves in the markets, I'm getting more and more emails, private messages from people who are saying they've just messed up, they can't deal with it, they've blown their accounts, and lost tens and even hundreds of thousands of dollars. So what are you going to do about that? Are you just going to try again the next time and do the same thing again, or are you going to learn how to do it? And I'd really encourage you, if you can't afford to buy the trading course, and one of them is only $200, the natural gas course. They're not expensive courses. But if you can't afford to buy the trading course, join my private group for a month. It's with a discount, it's $80. Join it for a month and stop losing $500, $5,000, $10,000, $50,000 in your trading. It's really quite a simple mathematical calculation. Don't lose money, learn how to do it, spend your $60 or $100, or at least just download the free stuff below this video and learn something before you throw away more of your money. It's very frustrating for me, folks, and I'm not cross or angry or weirded out or anything like that. It just kind of upsets me that so many people leap into these markets with so little ability, so little experience, so little knowledge of what they're doing, and yet so much enthusiasm and so much hope and so much anticipation for a better future provided by trading, a little bit more freedom, a bit more money, a bit more ability to do your own thing, live your own life the way you want to lead it, not be a slave to your corporate bosses and so on. I get all of that. But if you want that and you really seriously desire that, and if it's just a frivolous pursuit, then don't bother with it. I mean, you may as well just, have, some people just like to gamble, and that's fine. No problem with that whatsoever. But if it's a serious pursuit and you want that different, better, more liberated life, then learn how to do it properly, because you're only going to throw away your money and lose what you've already got, and you'll just be in a worse situation, even more enslaved, even more indebted to your banks and your boss and everything like that. So I just don't understand why people lose so much money trading. There's so much information available. You can do it. It's possible to do it. There's info out there. Join a mentoring group like mine. Learn how to do it. Just join for a month only if that's all you need. That's fine. But do something. Don't keep losing money like you've been doing. And I'm not talking to you necessarily I'm looking at you in your face. Not talking to you necessarily, but I might be. But I'm certainly talking to someone here in this live stream. Okay, folks, have a great trading day. I will see you in the next stream, probably tomorrow. I've done a stream every single day this week, and I think I'm going to try and finish it off with a stream tomorrow as well. It'll be the first week when I've streamed every single day, and I'm kind of enjoying it, and I'm hoping you are too. So if you are enjoying it, subscribe, like, and I'll see you tomorrow. Take care. Good luck with your trading.